For many years, the idea of saving money in the bank was seen as the safest solution to protect our savings. After all, banks offer security with accounts protected by financial institutions and the promise that our money would be there, safe and sound. But with today's economic reality, this notion of safety has been challenged. Inflation, which often goes unnoticed in daily life, is the main factor that has weakened the idea that the bank is still the best place to keep our money. Inflation isn't something you feel right away, but it's constantly eroding the purchasing power of your money. Even though your bank balance remains the same month after month, what you can buy with it decreases, and this happens without you immediately realizing it. Moreover, while you leave your money safe in the bank uses those savings to generate profit by lending them to others and charging higher interest rates than the return you get. This means that while the bank gets richer with your money, you're not tapping into its true potential. In a scenario where inflation destroys the purchasing power of saved money, you begin to realize that the old wisdom about saving money in the bank is outdated. Inflation is one of the greatest silent enemies of our money. It doesn't make noise, it doesn't appear in headlines, but its effects are felt every day as the prices of goods and services increase. And the worst part is that we often don't notice immediately how much it affects us. Inflation acts slowly, almost imperceptibly, but over time, it reduces the purchasing power of your money. Like a thief who enters your house at night and takes small amounts one at a time. When you keep your money in the bank, it may remain in your account, but in practice, it becomes worth less every year. For example, if you have $10,000 today and the inflation rate for 1 year is 6%, next year you will need $10,600 to buy the same things you could buy today with $10,000. This constant increase in prices means that the real value of your money keeps dropping without you doing anything to prevent it. This becomes an especially serious problem if you keep leaving your money stagnant in the bank, believing that it's safe. Meanwhile, inflation is robbing your capital's value. Every month you lose purchasing power, and your money becomes less valuable. So if you really want to protect your savings, you need to be aware of inflation and make smart decisions that can help fight it. Now that we've understood how inflation can erode your savings, it's time to explore a smart and secure alternative: government bonds. These investments, often overlooked, have immense power when it comes to protecting your money in the long run. Contrary to what many believe, government bonds are not boring or too complex for the average investor. In fact, they are one of the most stable and reliable options you can find, especially in times of economic uncertainty. Government bonds are a form of loan you make to the government. In exchange, the government pays an interest rate on the invested amount. This type of investment is highly secure because government bonds are guaranteed by the government itself. In other words, the risk of default is virtually non-existent, making them an extremely attractive option for those looking to preserve and even grow their wealth. Additionally, government bonds have a major advantage. They are indexed to inflation. This means that by investing in these assets, you are not only ensuring a fixed return, but also protecting your savings from the loss of value caused by inflation. There are different types of bonds with varying terms and yields, but the key point is that even in times of economic crisis, government bonds tend to be resilient. They maintain their value and often provide a return that exceeds what you would receive by leaving your money in the bank. If you are looking for a secure investment with stability and strong protection against inflation, government bonds should be at the top of your list. Additionally, investing in government bonds is a smart way to diversify your investment portfolio, creating a solid foundation that can endure over time. While the returns may not be as quick as other riskier investments, What you gain is security, peace of mind, and of course, the assurance that your savings are being protected from inflation erosion. If you are looking for an investment that is truly safe and at the same time has the potential to generate passive income, real estate is one of the best options available. For centuries, land and properties have been seen as solid, long-lasting assets. The reason for this is simple. Real estate is tangible, meaning you own something physical, something that can't be manipulated or printed like money. Investing in real estate offers a range of advantages. First, they tend to fare well against inflation. While the money you keep in a bank account loses value due to inflation, real estate by its nature tends to appreciate over time. This happens because, as the population grows and cities expand, the demand for real estate increases, causing prices to rise. Even during economic crises, the real estate market continues to be one of the most stable ways to protect your money. In addition to the property's appreciation, there is another significant advantage. Real estate can generate stable passive income, especially if you choose to rent it out. Rental income can provide a steady cash flow, which can be used to cover expenses or reinvest in more properties. This creates a sort of wealth cycle, where you not only preserve your capital, but also generate additional income over time. Another important point is that, by investing in real estate, you are investing in something durable. Unlike other assets, such as stocks or bonds, which can be volatile and subject to market fluctuations, real estate is a real asset that you can see, touch, and in many cases, live in. This durability and tangibility provide a sense of security and stability that few other investments offer. Investing in real estate is not only a way to protect your money from inflation, but also a smart way to build wealth over the long term. Whether you are buying property to live in, rent out, or flip for profit, the key to success in real estate is understanding the local market and having a long-term vision. Real estate may require a higher initial investment, but the return it offers, both in appreciation and passive income, is worth it in the long run. When it comes to investments, many people only think about increasing the amount of money they have, about earning more and more quickly. However, the true power of investment goes beyond that. It is a powerful tool to protect and even expand your legacy. Investing is not just about ensuring you have enough money to live comfortably now, but also about securing a safe financial future for your children, grandchildren, and even future generations. Investing is about building wealth that lasts beyond your lifetime. What you build today with wisdom and patience can be the financial foundation for your descendants. It's not just about accumulating money, but leaving a lasting legacy. This can be done through real estate, stocks, or even funds that provide a steady, passive income. What matters is that what you create today can serve as the bedrock for future financial stability, both for your family and for any cause you wish to support. Additionally, by investing wisely, you are taking a responsible approach. You're not just thinking about yourself, but about those who will come after you. The money you save and invest can turn into something much bigger than you can imagine. For example, if you invest in real estate, your family could have a wealth-generating asset for generations. If you invest in long-term stocks or funds, the appreciation over time could provide a solid financial foundation for your children's education or for your grandchildren's comfortable retirement. True wealth is not just measured by what you possess now, but by the impact your financial decisions have on the people around you, especially future generations. The legacy you create by investing intelligently and responsibly will be a far more meaningful inheritance than mere material goods. Ultimately, investing is a way to care for those you love, ensuring that they have a safe and prosperous financial future. Gold has been considered a symbol of wealth and stability for thousands of years. During periods of economic crisis, political instability, and even in times of war, gold has always been seen as a safe and reliable store of value. It represents a tangible form of wealth, something that does not depend on paper promises like the money issued by banks or government currencies. Gold cannot be printed in large quantities like money, and it is this scarcity that gives it an invaluable worth. Unlike paper money, which can be easily devalued due to monetary policies and inflation, gold maintains its value over time. What you can buy with gold today will likely hold the same value or even more in the years to come. While the currencies of countries can lose value due to financial crises, gold resists. In fact, during crises, the value of gold tends to rise as people seek security in uncertain times. During the Great Depression, for example, gold was seen as a safe haven for those who wanted to protect their savings. Additionally, gold is a durable asset. No matter how much time passes, it doesn't deteriorate, corrode, or lose value, unlike other assets that can be affected by various factors like the stock market. In times of high inflation, gold becomes a way to preserve the purchasing power of your money. While traditional currencies lose value as prices increase, gold retains its value, serving as a shield against purchasing power loss. Investing in gold can be a way to ensure that you have a physical and reliable asset to preserve and even grow your wealth. Whether buying gold bars, coins, or even stocks in companies that mine gold, this precious metal remains a smart way to protect your finances in uncertain times. Unlike money in the bank, which is subject to depreciation, gold stands firm as a real and tangible value. Lastly, gold is a long-term investment. Don't expect its value to rise rapidly or explosively, as can happen with other risky assets. What gold offers is stability and protection over the long haul, and this makes it a key pillar in any well-diversified investment portfolio. Investing in gold doesn't mean simply seeking quick profits, but rather preserving what you have already accumulated and ensuring that its value remains intact, no matter the economic climate. Often, society bombards us with the idea that true wealth is visible, extravagant, and should be celebrated with big achievements and appearances. However, true wealth, the kind that really matters, is quiet and stable. It is not measured by grand displays or the immediate value of material goods, but by tranquility, security, and consistency over time. This wealth is built step by step, with patience, planning, and strategic financial decisions, far from the impulse for quick gains and appearances. True wealth lies in financial security that allows you to live with fewer worries, knowing that regardless of what happens in the world, your finances are protected and constantly growing. Unlike the frantic race for quick and accelerated returns, true wealth involves a more thoughtful and intelligent path. It's about making the right choices based on knowledge, discipline, and a commitment to the long term. This type of wealth doesn't need to be displayed with luxury cars or mansions. On the contrary, it reveals itself in daily decisions, in the way you manage your money and make sound financial choices. The greatest sign of true wealth is being able to sleep peacefully at night, knowing your savings are safe and your financial future is guaranteed. This peace of mind doesn't come from speculation or the pursuit of quick gains, but from building a solid and stable foundation. Investing intelligently, choosing assets such as real estate, government bonds, and even gold, is a way to ensure that stability and peace of mind. These investments are not for those looking for financial adventures, but for those seeking consistency. Over time, they will generate steady and secure growth, without surprises, without excessive risks, but always on a firm and predictable path. True wealth also reflects the legacy you leave for others. If you can build a solid and resilient portfolio over time, you're not only enriching yourself, but also creating a legacy of security for your family, passed down from generation to generation. Instead of being a volatile wealth that can disappear quickly, it becomes something lasting, something that goes beyond your own life. Therefore, instead of worrying about appearances and status, seek true wealth, the kind that offers peace of mind, freedom, and long-term stability. True wealth is quiet, stable, and often imperceptible to those only looking at the shiny surfaces of the financial world. But for those who understand the value of steady and secure growth, it is more valuable than any display of wealth. One of the biggest barriers people face when it comes to investing and protecting their money is their mindset. For many years, people were taught to view money as something that should be saved and kept safe without taking risks. This mindset, although helpful in the past, is no longer the best way to handle finances today. The fear of investing, of seeking alternatives to the bank, can be paralyzing. But true financial transformation begins when you decide to change your way of thinking. Saving money in the bank is often a choice we make out of habit or fear of losing control. The idea of keeping money safe in the bank is comforting, but as we've seen, it's not the best way to protect your financial future. True change happens when you begin to see money not as something to be stored, but as a tool that can be worked to generate more wealth and provide long-term stability. Changing your mindset means understanding that money should work for you, not the other way around. This involves learning how to invest intelligently, protecting your assets from inflation, and seeking opportunities that offer security and growth. It's not about taking reckless risks, but making conscious and well-informed decisions about where to place your savings. This mental transformation requires discipline. It requires study, patience, and a willingness to learn. It's necessary. To understand that just like any skill, learning to invest is a continuous process. Instead of seeing money management as a burden or a scary responsibility, you should see it as an opportunity to build a safer and more prosperous future. Furthermore, when you change your mindset, you begin to see finances more strategically. The way you handle your money becomes more intentional. You start making decisions based on long-term goals rather than seeking immediate gratification. This shifts the way you view financial life and consequently improves the way you organize yourself to achieve financial freedom. Ultimately, the true shift in mindset is realizing that making smart decisions isn't a one-time event, but a constant journey. Every financial choice you make, whether related to investments or simply saving, is an opportunity to learn and grow. Over time, your financial mindset becomes stronger, more confident, and better equipped to handle economic challenges in a more strategic and calm way. Investing long-term is not just about waiting for returns in the distant future. In fact, the true power of long-term investments lies in the ability to compound, to grow constantly over time, even in an unstable financial environment. Many investors make the mistake of seeking quick and immediate gains, which can be tempting, but often leads to substantial losses. True wealth, however, is built slowly and steadily. Investing long-term requires patience and discipline, two essential qualities for anyone seeking financial security. Rather than reacting impulsively to market fluctuations or being swayed by promises of quick profits, the long-term investor focuses on assets that demonstrate consistent growth over the years, such as real estate, stocks in good companies, and government bonds. These investments, though they may require more patience, offer the security that over time, the value of your portfolio will grow steadily with less risk. The key to success in the long term lies in the concept of compound interest, where your investments start generating returns that in turn generate even more returns. Over time, this effect amplifies, creating a growing source of wealth. The earlier you start investing, the more time your investments have to grow and multiply. That's why it's important to start now, even with small steps, to reap the benefits later on. Robert Kiyosaki, author of the famous book Rich Dad, Poor Dad, always emphasizes one of the most powerful lessons for achieving financial independence: the difference between assets and liabilities. Many people think wealth is simply about making more money, but the secret lies in understanding how you handle the assets and liabilities you have. Assets are anything that puts money in your pocket continuously without you having to actively work for it. Examples of assets include rental properties, dividend-paying stocks, investments in profitable companies, or even a small business of your own. These assets generate a source of passive income, allowing you to earn money while you sleep, travel, or even rest. Over time, the value of these assets tends to increase, generating more and more returns. On the other hand, liabilities are things that take money out of your pocket. These are regular expenses like debts, utility bills, such as credit cards, and even some types of goods that depreciate over time, like expensive cars or luxury items. Kiyosaki emphasizes that many people end up getting into debt with liabilities, thinking they are investing in valuable assets, when in reality, they are just feeding their expenses and increasing their financial burden. The key to wealth, according to Kiyosaki, is turning as many liabilities as possible into assets. This means using your income wisely, always seeking assets that generate more and more resources, while controlling or eliminating liabilities. By doing so, you create a wealth cycle where your assets grow and generate more returns, while you decrease your financial obligations. Therefore, true wealth begins when you understand the difference between assets and liabilities and make the right decisions to create a solid base of assets. When you start prioritizing the acquisition of assets and controlling your liabilities, your financial journey becomes safer, more strategic, and, most importantly, more enduring. Robert Kiyosaki always stresses the need to diversify your income sources. He firmly believes that relying solely on a salary or a single source of income is one of the biggest mistakes anyone can make. According to Kiyosaki, true financial freedom comes from the ability to generate multiple sources of income, which offers more security, more opportunities, and less vulnerability to crises or unforeseen events. Having multiple sources of income means that you are not entirely dependent on a single stream of money, such as your job. This can include investing in assets that pay dividends, starting a side business, creating passive income sources through real estate, or even selling products or services online. The concept is simple. The more money sources you have, the more flexibility and security you will have to deal with economic fluctuations and financial surprises. For example, if you have an income source through a job, but also invest in rental properties that generate a steady cash flow, this means that even if something happens to your job, you have other ways to ensure financial stability. Furthermore, having multiple income sources can help you reach your financial goals faster. With different cash flow streams, you have the ability to reinvest more aggressively and eventually achieve your financial freedom. Diversifying your income sources also allows you to explore new opportunities and minimize risks. If one income source decreases or stops generating profit, you will still have other ways to sustain yourself. This is especially important in an increasingly volatile world, where economic changes can directly impact job and investment markets. Therefore, if you want to achieve true financial freedom, it's not enough to depend on a single salary or one investment. The key to long-term financial security is building a diversified portfolio of income sources. This not only reduces risk, but also provides more opportunities for growth and expansion. Lastly, Robert Kiyosaki always emphasizes the importance of continuous financial education. For him, formal education, which you get in schools, is essential, but it's not enough when it comes to achieving true financial freedom. Financial education, on the other hand, is a learning process that should never stop. The financial world is constantly changing, and those who don't stay updated and learn how to manage their money strategically fall behind. Financial education is not just about learning how to budget or understanding investment concepts. It involves developing a mindset that understands market opportunities and risks, knows how to make financial decisions based on knowledge, and prepares for economic surprises. Kiyosaki is clear in saying that rich people never stop learning about money, investments, and financial strategies. They constantly seek new information, whether through books, podcasts, seminars, or financial advisors. By investing in your financial education, you are creating a more secure and controlled future. You learn how to make informed decisions about where to put your money, how to protect your assets, and how to grow your wealth consistently. This continuous knowledge also allows you to adapt to new economic situations, such as changes in interest rates or tax legislation that can impact your finances. Therefore, if you want to achieve financial freedom and build a solid future, never stop learning. The more you understand about the financial world, the more prepared you will be to make intelligent and strategic decisions. Financial education is not a one-time event, but a continuous process that ensures you are always ahead, no matter what happens in the market. If you like this content and are ready to transform your financial life, don't forget to like this video and share it with your friends and family who could also benefit from these tips. And of course, subscribe to the channel to stay up to date with more valuable tips on how to achieve financial freedom. Let's go together on this journey towards financial success.